Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 1st of March in 2022. Welcome to the 3rd month of the year. Now let's kick this video off with a beginning to March. Volatility still is king. Volatility still is on the move. That's the VIX. That's the VIX futures. They're moving 3%. In terms of the movement price, it's about 10%, but we quote VIX in terms of percent. That's 3. That's 33.5. That's a broader VIX. We'll come to that later. This is the SPX. Now, let's just get a quick look at where we are in the market, what levels are in play, and what's happening. The market's in a downtrend, at least in terms of the daily chart. What we're going to be looking at here is daily charts on the left and weekly charts on the right. So as you're looking at these price levels, keep in mind this is the bigger picture. And this encompasses really back to 2017. But the daily chart is only going to show us about the last 9 months in the market. So as we push to these levels, 4,200 does continue to be the key inflection point. And that means a market that holds above that is going to be seen as defending support. That takes us back to here. Now, if this market does continue this downtrend, it will open up the market for much lower prices, and that could and would include a drop straight down, potentially very quickly to about 3,400 or key levels as stopping points before that happens. That's the big picture for the S&P. On the Nasdaq, we've seen a deeper pullback, and that deeper pullback has taken us down to 13,000. And the tech sector itself is being hard hit by the rise in interest rates, or at least this new concern about inflation and other functions on the bigger picture. So the technology stocks seen here at the Nasdaq, and we can take a look at some of them, which include Amazon. Again, think about the daily chart on the left and the weekly on the right. Apple, similar structure. Microsoft, again, daily left, weekly right. And we can look at others, including, it's more of a retail company, but Tesla can be included in our monsters of tech and in general Nasdaq stocks. Tesla had a steep pullback. It may not seem like it on this weekly perspective, but in terms of how it's moved from the context of price high to price low, and looking at percent function, that's about a 42% move. That is a big move for a big, flying, highly volatile tech stock, especially within the context of the Nasdaq. And we can look at other stocks such as Google, which had a strong rally and a strong, persistent weekly chart uptrend that has given way to a broad trading range and quite high volatility in the picture. Now that's the broad picture for Nasdaq stocks. The Dow Mini Futures, which is 30 stocks in the Dow, we see it as a sideways trading range on the daily chart, not dissimilar to what we saw in 1819 and what we're seeing throughout 2021. And the Russell, we had it as a long-term range, that's a breakout, and a longer-term range. It also is volatile, so that's the big picture. Crude oil, as long as the Russia, Ukraine, and geopolitics come into play, might see crude continue its push higher. And this is quite sensitive as a commodity, given that it went negative, or at least the front month contract went negative. The continual contract traded to about 5 per barrel, but nonetheless, crude oil has recovered magnificently in the context or dual forces of inflation on one end, and of course the geopolitical concerns, and how that is affecting the oil price to the upside. Double whammy, 2 factors. Nonetheless, crude in today's session did break above 100 per barrel, and that continued up to peak before turning back to the downside on the intraday frame. In fact, we can look at that on the 1-minute chart. There's crude, there's the gap, there's a continuation up above 100 and the reversal point at 107. And that's a significant move for the commodity. That was a strong play, and that pushed up some stocks, including Chevron Texaco, including ConocoPhillips, and ExxonMobil. Those are key stocks that continue to push higher in the context of energy. Other stocks, while we are looking at them, were Lockheed Martin in the context of the Ukraine or defense stocks in general. Lockheed Martin, that saw a weekly chart surge, and the bulk of the surge has been in the last 3 or so sessions. That is a big play. There's the weekly chart, long-term consolidation, but the biggest move have been in the last 3 trading sessions as defense stocks or the defense sector has become in vogue. And you're seeing stocks like that make 52-week highs. All alongside of Lockheed Martin, we can also take a look at Raytheon. And again, just defense contracting names. Not a lot going on in the weekly chart in terms of movement strong to the upside. And just to compare contrast, something like Apple has a strong push to the upside. That is a strong directional move. Raytheon, others, not so much. Until the last few trading sessions. Raytheon is caught up in that geopolitics as well. But so is gold. These are the things that are in move or in play as we start March. Gold had a long-term, I would almost say 2-year consolidation between 2000 and about 1800. Made the midpoint about 1850, and we've seen just recently gold push, break, surge to the upside. That's in the context of, again, geopolitics. That's going to be the theme of today's video. Not to be outdone, so is the bond market. I like to look at TLT. I will trade TLT. But in the broader bond market, this is ZN. That is your 10-year Treasury note, weekly chart and daily here. The most recent events have pushed traders or pushed investors or pushed market participants into what we might call risk off. Risk off would be selling stocks. This is a very broad term, but selling the equities, selling stocks in general, and rotating money into safety assets such as the bond market. You're seeing a bigger move, slightly bigger move in today's session at least, for the 30-year bond. And that's seen here as ZB. Downtrend on the weekly chart, but nonetheless, things do not go straight down. And when the market gets caught up in risk aversion, and there are plenty of headlines that will put market participants into a risk aversion state of mind, that is the correct way to think about all the different headlines that can affect the tape at any point in time. The bond market is catching a bid on risk off. Now, that is the broader picture. Promised I'd look at the VIX, and VIX itself, VIX Volatility Index, is pushing up just shy, had a little pullback from the 38 level. And this is the weekly chart of VIX, and this is the daily chart. No technical analysis, but only looking at the spikes or how this trades between periods of low volatility into high volatility into low, and back and forth. VIX futures as well. Same logic. Getting outside the broader picture, let's look at individual stocks that are in play. These stocks are our simple list of strong stocks getting stronger, or in particular, which stocks in the S&P 500 are making new yearly highs. And the way to get this is load the scan query. For me, it will be public here in thinkorswim. And then go to new yearly highs. These are stocks that are pushing up to a new 52-week high, or as the software says, a 252-day high. You can use the same logic with new yearly lows, and we'll show that in just a moment. But the stocks that are pushing up, I sort them by market cap here in the thinkorswim scanner. It is Chevron Texaco, it is Raytheon, ConocoPhillips, Lockheed Martin, Northrop Grumman, Freeport McMoran, and others, General Dynamics, and all the way down. You can see Nucor and others that are in this category of stocks making new highs. They tend to fall in general into defense or defense contractors or energy stocks. And again, that's crude oil is pulling up stocks such as Chevron and ConocoPhillips and others, ExxonMobil. But what about the stocks making new 52-week lows? By the way, 26 in the S&P 500 are making new 52-week highs. There are some stocks pushing off to new lows, and they're in the same world. S&P 500 stocks making new yearly lows, sorted by market cap. Only one to name, and that's JP Morgan. That's a financial company, and financial stocks, given the movement in the bond market, the push down in yields, they're hurting the financial industry. So there is the XLF, the broader picture of the financial stocks. Individual names that were hurt big in today's session include American Express, Capital One Financial, Wells Fargo, and down the list. Continue watching the levels. Continue watching the stocks, your positions you have, the hedges you have. Always be safe in these headline news. This is Corey Rosenblum with tonight's Theo video update for March the 1st, 2022.